Summit under the theme Capitalizing on India's Economic Ascent for Viksit Bharat. Dignitaries for today's event have arrived inside the hall. I request you all to please put your huge warm round of applause for Mr. Amarjit Chopra, whole-time member, Securities and Exchange Board of India, SEBI. I request everybody to kindly take their seats. Ladies and gentlemen, welcome to ASSOCHAM's 17th Mutual Fund Summit under the theme Capitalizing on India's Economic Ascent for Viksit Bharat. Please join me and welcome a huge round of applause to Mr. Amarjit Singh, whole-time member, Securities and Exchange Board of India, SEBI, Mr. S.K. Jindal, Chairman, National Council on Commodity Markets and Investment, ASSOCHAM, and Chairman, Jindal Exports and Imports, Mr. Love Chaturvedi, Chairman, National Council on Capital Market, ASSOCHAM, and ED and CEO, IndusInd Securities Limited, Mr. Sandeep Bhardwaj, Co-Chairman, National Council on Capital Market, and MD and CEO, Paytm Money Limited, Mr. Jayprakash Gupta, Co-Chairman, National Council on Capital Market, ASSOCHAM, and Founder, Dhan, Mr. Sanjay Agarwal, Senior Director, BFSI, CareEdge Ratings, Mr. Patil, Chief Business Officer, National Securities Depository Limited, and Mr. S.C. Agarwal, Member Managing Committee, ASSOCHAM, and CMD SMC Group. This lamp lighting is a symbol of enlightenment, purity, and a collective spirit that guide us towards progress and prosperity. Ladies and gentlemen, please give a huge round of applause for all our honorable dignitaries. Thank you, sir. May I now request our dignitaries to kindly take their seat on the dais. Ladies and gentlemen, please rise for the national anthem.
गणमन अधिनायक जय हे भारत भाग्य विधाता पंजाब सिंध गुजरात मराठा द्राविड उत्कल बंगा विंध्य हिमाचल यमुना गंगा उच्चल जलधि तरंगा तव शुभ नामे जागे तव शुभ आशीष मांगे गाहे तव जय गाथा जन गण मंगलदायक जय हे भारत भाग्य विधाता जय हे जय हे जय हे जय 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 हे
May I now request Mr. S.K. Jindal to kindly welcome our chief guest with a welcome floral bouquet. Thank you, sir. And now to set the tone for today's summit, it is my privilege to invite Mr. S.K. Jindal to deliver the welcome address.
Good morning, friends. Mr. Amarjit Singh, whole-time member, Securities and Exchange Board of India, SEBI. We thank you for being with us this morning. Mr. Law Chaturvedi, Chairman, National Council on Capital Markets, ASSOCHAM and ED and CEO, IndusInd Securities Limited. Mr. Sandeep Bhardwaj, Co-Chairman, National Council on Capital Markets, ASSOCHAM and MD and CEO, Paytm Money Limited. किसी की अभी रिक्वायरमेंट होगी कैश कर देंगे ना? Mr. Jayprakash Gupta, Co-Chairman, National Council on Capital Markets, ASSOCHAM and founder Dhan organization. Mr. S.C. Agarwal, Member, Managing Committee, ASSOCHAM and CMD, SMC Group, my dear friend. Mr. Sameer Patil, Chief Business Officer, National Securities Depository Limited. Mr. Sanjay Agarwal, Senior Director, BFSI, CareEdge Ratings. Honorable Chief Guests and distinguished regulators, esteemed policymakers, respected industry leaders, eminent speakers, members of the mutual fund fraternity, ladies and gentlemen, it is both a privilege and a pleasure to welcome you all to this important national conference. Mutual Fund Conference, ASSOCHAM has been active since 2000. The first one was held in 2000. And since then, we have been regularly doing it. In between, there were some breaks, but still, it is very dear to our heart, and we want to do much more on this subject for the people of India, because it is such an important thing which helps all the people to join for nation building. When they save money, they put this money in mutual funds, this money is used for the country, and then country can use this for its development. So this is a big thing to be done for country building. We meet at a defining moment in India's economic history, a time when the world increasingly looks at India not merely as a fast-growing economy, but as a trusted engine of global growth, innovation, and opportunity. The vision of Viksit Bharat is no longer a distant aspiration. It is a national mission that calls upon every institution, every industry, and every citizen to contribute meaningfully to India's transformation. The financial sector, and particularly the mutual fund industry, has a pivotal role in this journey. A strong economy requires strong capital formation. It requires disciplined savings, efficient allocation of capital, and broad-based participation in wealth creation. Mutual funds perform this vital function by connecting the savings of millions of households with the productive enterprises that drive economic growth. In doing so, they not only create wealth for investors, but also help finance India's development. When we started our first event, I remember the AUM under the total mutual fund industry used to be in thousands of crores, like a figure of about 83,000 crores, and which was quite stable. It was not going up and down. It was hovering around that number. But today, that 80,000 crores has become 83.47 lakh crores. Thanks to SEBI, I tell you from the very beginning, I have been saying, SEBI at that time used to impose new conditions that you can do this and you cannot do this and you must report to us by 3:30 or something. All those informations they were requiring, and all the boys of mutual fund who were heading these mutual funds, they used to come to Mr. Kurian, MP chairman at that time, our friend, and they used to tell him, sir, another new condition, sir, another new condition. And he used to tell them, don't worry, this condition is for your benefit. And it so happened, the foundation became so strong with these SEBI's directions that people now come automatically to put money. Earlier it used to be that you have to have agent who will go convince the person that you deposit this here and they will share some income out of it, etc. and etc. But now money is flowing by itself only because the foundation of the thing, the transparency of the operations is so transparent that everybody has confidence, everybody has got full faith in the system. That is why it has become a lakh time more, 80,000 crores and now 83 lakh crore. Banks always used to convince people that no, don't move from fixed deposit because they were getting big income in fixed deposits. And ASSOCHAM was always telling them, no, go to mutual fund. It is a better and more efficient way of saving. And we used to tell them that at least you start, you taste it, and then you decide you want to continue with this or not. Our idea was to let people taste that how it works. And until they have they haven't tasted, they cannot say anything. They will not do it. So our idea was just to let them taste at least, and it worked. Last 26 years now, you see the figures have gone from where to where. Mutual fund, our allocation in the whole of the world, people investing into mutual fund was very little. As compared to developed countries, it used to be very, very high. Now I understand that our share is 23% of the households, they put this money, the savings are 23% of the total saving in mutual fund. Earlier it used to be 2-3%. Now, worldwide it is 50 to 60% and in India it is 23%. So it is still reasonable and we are catching up and we will still catch up more and we will come near those figures at least in the near future, I would say. In another 10 years, we will be hovering around the figure of 50-60% because it is efficient industry, it is efficient way of saving money. The Indian fund industry has undergone a remarkable transformation over the past decade. Technology has democratized investing, digital platforms have simplified access, and systematic investment plans have encouraged financial disciplines among millions of families. Increasingly, investing is becoming a habit rather than an exception. And when we see every day these advertisements by AMFI, they say this investment sahi hai, sahi hai, sahi hai. So it gets incorporated here that this has got some meaning and this is the right way of saving money. So we must put some allocation for mutual fund. And those who have not tasted until now, I would still request and say that at least taste it so that you and your following generations, आने वाली जो नस्लें हैं, फिर वो भी उसका इस्तेमाल कर सकती हैं. अगर आपने ही नहीं किया तो वो भी नहीं कर पाएंगी. तो let them have the benefit of that. उसके लिए ज़रूरी है कि आप शुरू तो करें. Yes, with opportunity comes responsibility. As our industry expands, we must ensure that growth remains sustainable, transparent, ethical and inclusive. Investor trust is our most valuable asset. It must be strengthened every day through sound governance, responsible innovation, robust risk management, and unwavering commitment to investor protection. SEBI is doing this job very well, and we must thank SEBI for helping the whole country in organizing this and maintaining this and ensuring that this happens in the right direction and nobody can play with it. Earlier, 25 years ago, it was a different story. Artificial intelligence, advanced analytics, automation, digital onboarding, cyber scrutiny, and data-driven decision-making are fundamentally reshaping the way asset management companies operate and engage with investors. Technology is no longer merely an enabler. It has become a strategic force that is making investing more efficient, transparent, personalized, and accessible across every corner of our country. Now the industry doesn't give you surprises. Earlier it could be surprises quite a bit. But now because everything is so well organized, let us use this platform not only to exchange ideas but also to reaffirm our shared commitment to building a stronger, more inclusive and globally competitive financial ecosystem. One that contributes meaningfully to the vision of a Viksit Bharat. We have started in that direction and we will definitely reach it. Now it seems that it is doable and we are in the right direction. That is the best thing. I once again extend my warmest welcome to each one of you. I wish the conference every success and all of you an engaging, insightful and productive day. I would like to thank you all those speakers who have put in a lot of their efforts and time in preparing for our guests here, our audience, and I thank them from the bottom of my heart. Friends, you will agree that India's journey to Viksit Bharat will not only be built by only the factories, highways or technology. It will also be built by the confidence of millions of investors whose savings are transformed into the nation's productive capital. The mutual fund industry has the privilege and the responsibility of making that transformation possible. So with these words, I would like to thank all of you for coming here and giving us this opportunity to enrich you, which I hope by the end of the conference, you will, when you go back, you will be more enriched with the knowledge on mutual fund industry, and you will be more comfortable. If there are some questions, of course, you are most welcome to ask them, clear your doubts during the day. Thank you very much.
Thank you, sir. May I now invite Mr. Love Chaturvedi for his address.
Good morning, everybody. Welcome, Shri Amarjit Singh Ji, my fellow dignitaries at the dais, the regulators, the participants, the audience, the ASSOCHAM. Thank everybody to bring this forum, which is very pertinent. I would like to say that this kind of make me a bit nostalgic, because when I came back from US sometime in 2007 and 8, I started as in my career in the asset management industry in India, which is now Nippon Asset Management. And there we drafted first risk management guidelines for the asset management industry along with AMFI. And since 2007 and 8, I must say that mutual fund is not just evolved, it's probably have been revolutionized. As we all know, that AUM, which Jindal ji just mentioned, has reached 80 lakh crores now, was just 14 lakh crore 10 years ago, which is a six-fold increase in last decade, which probably is unheard of. Even the systematic investment plan, as they call SIP, which is the bone of a retail participation in the industry, has now touched around 32,000 crore per month and is already about 20% of the overall AUM of the industry at around 17 to 18 lakh crore. That says the power of retail that is now propelling the Indian economy and the Indian capital markets. As we all know, and not just that, there are folios. The mutual fund folios are around at 270 million, which probably I'll say it was around 40 million up until 2014. Again, the six-fold increase in the folios of the mutual fund, which tells us the story that it is really going grassroots and going very fast. The last thing about the penetration, Jindal ji just mentioned about the penetration as well. The unique customer base is around 6 crore. We were just speaking about it before we came here. And it's about 4.5–5% penetration. The global is around 40%. So we are nowhere close, even though we may take some accolades of what we have done so far. I can tell you we are not even close to what we can achieve and what we will achieve in this Viksit Bharat. Like they say, that is not where you come from. It's actually where you go that matters. I don't know whether many of you are aware or not, but AMFI just came out with the projection of where this industry will be by 2047 Viksit Bharat. And I hope that you are ready with the mind-boggling number. As per that estimate, it's going to be around 2,800 lakh crore by 2047. It's a 35-fold increase from where we are. An astonishing number which will be achieved under the guidance of our regulators, the government, and most importantly, all of the retail participation and the power of the India. As I mentioned, that the mutual fund, which is now revolutionizing, plays two key roles for us in our country. One is the capital formation. Most of you must be seeing, and we were speaking about it again earlier today, that the FPIs has not been very happy with us for last year or so. The money is going out slowly, trickling out. However, it is the mutual fund, it is the participation of each one of us, each one of you, that is now contributing more than 20% of the capital formation in the stock market. It was, it was unheard of just some time back. And it is so strong that our markets are going up irrespective of FPIs not participating to an extent that we have seen in the past. Obviously, we are very hopeful and we are very confident that going forward, both mutual fund industry as well as FPI go hand to hand. But I just want to highlight the role of mutual fund for the capital formation, for our entrepreneurs, for our infrastructure, for our industry. That goes a long way to create Viksit Bharat. The second key goal is the financialization of household savings. As you all probably already know, that we as India are very fond of gold and real estate, and it is the power of mutual fund that finally led to that movement where the money started moving out of the hard assets to the financialization, and not just the low return assets like FDs, but coming to mutual fund. Just to give a number, that the ratio of mutual fund to FD was around 10 to 12% up until 10 years ago. It has gone up 3 times to around 33% as we are speaking. That is the channelizing the retail money into the capital formation via mutual fund into the relatively higher returns and the sustainable return. It's something which is incredible. Like I said, to make that 2,800 lakh crore by 2047, 35 times growth, there will be some levers of growth that will be required. The first one is a penetration. We already spoke about the penetration, which is around 4.5%, and the AUM to GDP is around 20%. Both of these penetrations are still subpar with the global standards, and we can still grow 10x and multiple from here on just over next 5 to 7 years if we have to complete our journey of 35x by 2047. Top 30 cities are still accounting for around 80%. Beyond 30 cities initiative, which was also taken by the regulator, is helping now AUM penetrating the hinterlands, and that the remaining 20% in times to come probably is going to be the driver of the mutual fund growth and the retail participation. Demographic dividend. I don't know whether you're aware, but India is one of the largest young population with median age of 28 years. Some of us are not helping that cause, but I'm pretty sure there are a lot of others who are helping that and making that 28 years, as the India is the highest share of young working population. And that is what is going to provide the platform with the Gen Z, with the AI, with the technology. One of the most important levers, according to me, would be what has already been spoken about in few budgets in last few years, is the one KYC, unified onboarding of the retail customer, interoperability, fully interoperable KYC. That means once you have the bank account, then any financial services for that matter, then your onboarding should be smooth, and we should not have been able to do the KYC again. I'm pretty sure that that's in unveil at various stages, and that will also propel. Would like to touch upon, Jindal ji touched upon it, the support the regulators has provided to this industry and has given the confidence and trust. I can tell you about a decade or so ago, one day there was a news that came that the upfront commission has been abolished for the mutual fund. I don't know how many of you would remember that day, but that probably it came as if would be the end of the industry, because I don't think the industry knew about how to sell without the upfront commission. I think it was around 12 years ago or so, if I could recollect. And interestingly, since then, the growth has not just been what it used to be, probably have taken leapfrog from there. And as an industry, we all have come around and have learned to follow the rules and ensure that sustainable growth comes with the solid retail participation. Some of the SEBI regulations for the 2026 that has come out that rest on the 3 pillars. One is cost transparency, governance and accountability, and structural innovation. All this is deepening the mutual fund penetration. The MF Lite framework also is another framework that helps the overall cause for the passive investments, which probably is going to take the leapfrog. So with so many levers in place, if we just manage the challenges which comes in the penetration, which comes with the one KYC, which comes with the digital onboarding, the AI, I think the mutual fund industry and all of us will get participation in the overall growth of India and the Viksit Bharat. I would like to wrap up with the closing remark that the industry will probably now have more depth and the breadth and we probably will have a lot of long-term participants who should be retained through the volatility, and we should be able to democratize through the AI-powered advisory, which used to be only to the wealthy ones, will now be within the reach of each one of the retail and the hinterland. And with this, the mutual fund will reach what is its target and its role. Thank you very much. Jai Hind. Thanks.
Thank you, sir. I am now inviting Mr. Sandeep Bhardwaj for his address. I would request sir to be brief so that we have enough time to hear from our chief guest, sir. Thank you.
Thank you. Thank you very much. I think a lot of perspective and the numbers has already been shared. So I will not touch upon all those numbers. Numbers speaks its own story when mutual fund growth is concerned. So first of all, good morning, everyone. It's my privilege and honor to welcome all our distinguished guests, respected regulator, industry leaders, colleagues, and friends to the 17th ASSOCHAM Mutual Fund Summit. A very warm welcome to our Chief Guest, Shri Amarjit Singh Ji, Whole-Time Director, SEBI. We are honored by your presence and deeply appreciate SEBI's continued leadership in strengthening India's capital market and protecting investor interests. I also extend my warm welcome to our colleagues on the dais, Mr. S.K. Jindal Ji, Mr. Chaturvedi Ji, Mr. Jayprakash Gupta Ji, Mr. Sanjay Agarwal Ji, and Mr. Patil Ji, and to all the eminent speakers, industry experts, partners, and participants, and all the guests who have joined us today. Friends, there is a saying, the best time to plant a tree was 20 years ago. The second best time is today. In many ways, that is also the story of our Indian mutual fund industry. For decades, we have been planting the seeds of financial literacy, disciplined investing, and the long-term wealth creation. Today, these seeds have grown into one of the strongest pillars of Indian financial ecosystem. But I believe the most exciting chapter is still ahead of us. India is entering what could be the most significant wealth creation cycle in the history. We are the world's fastest growing major economy. Our digital public infrastructure is becoming a global benchmark. Household financial savings are steadily moving from physical to financial assets, and millions of first-time investors are entering the capital markets every year. The mutual fund industry sits at the heart of that transformation. However, our journey is far from the complete. Despite remarkable growth, mutual fund penetration in India remains modest. Compared with developed markets, a large majority of Indian households are still outside the formal investments ecosystem. That tells us one thing: our biggest opportunity is not increasing market share, it is increasing market participation. The next 100 million investors will not come because markets are rising. Index are growing, Sensex are growing, it's making new highs. They will come because we make investing simpler, more trusted, more transparent, and more accessible. The responsibility belongs to all of us: regulators, asset managers, distributors, fintechs, exchanges, and market infrastructure institutions. This year's summit theme, capitalizing on India's economy ascent for Viksit Bharat, could not be more relevant. As India progresses towards becoming a developed nation, capital markets and mutual funds will play an increasingly important role in mobilizing household savings into productive investments that fuel entrepreneurship, infrastructure innovation, and economic growth. At the same time, we are witnessing a profound transformation. Technology and AI are changing how investors discover products, seek advice, and build portfolios. Regulators continue to evolve, strengthening governance while encouraging innovation. Investors' expectations are changing faster than ever. The industry, therefore, has an opportunity to move beyond simply managing money. We must help build financial confidence and trust, because ultimately investing is not merely about generating returns. It is about helping a young professional buy their first home, establishing parents to fund their children's education, supporting entrepreneurs in taking risks, and giving every Indian the confidence to achieve financial independence. That to me is the true purpose of our industry. Today's discussion will explore these opportunities from multiple perspectives: regulation, market outlook, investment strategies, technology, innovation, and investor education. And I'm confident the conversations today will generate practical ideas and meaningful insights that will help shape the next phase of growth for our industry. On that note, I once again welcome each one of you and thank ASSOCHAM for bringing together such an outstanding gathering of policymakers, regulators, and industry leaders. I wish you all the very productive, insightful, engaging summit. Thank you very much, and I wish everyone a wonderful day ahead.
Thank you, sir. I now invite Mr. Jayprakash Gupta for his address.
Good morning, everyone. Respected Amarjit sir, whole-time member SEBI, Subhash Agarwal ji, Chairman SMC, my colleagues, love, Mr. Bhardwaj, Mr. Agarwal, Samir, Mr. Jindal, and all the dignitaries present here, a very warm welcome to all of you. I would like to start with few things. I think बहुत सारे data already share हो चुका है. Just to start with, I'd like to say that there are decades in which very little changes happen. And there are years when the change is so fast that it takes care of the next few decades. For India, we are standing at such inflection point where we have, for decades, we have heard about India's potential. Today, we are witnessing the possibility of India becoming a developed nation. So the theme of today's summit, that capitalizing on India's ascent for Viksit Bharat, is very apt and appropriate. As we want to grow from here, there is one question which all of us in this room should be focusing on is, as India will create wealth, the wealth will be owned by a few or it will be owned by hundreds of millions. That is a real question, I think, which we need to answer. And it's an honor for me to address this gathering as a co-chair of the Council on Capital Markets and also stand here as a founder of a company. As a founder, we have this approach of looking at industries very differently. We do not ask what's the size of the market, but we ask what problem are we solving. And the problem for us as a nation is not about lack of savings. India has always been the saving first country. What is the challenge here is now enabling Indians to convert this savings into ownership. The ownership of businesses, the ownership of innovation, the ownership of growth, and ownership of India's future. And this can only be possible through capital markets and through mutual fund industry. For years, India has seen that investing was very complex. There were too many products, too many jargons, too much dependence on timings. But in last few years, we have seen a fundamental change happening. Technology has reduced that friction. Information has become democratized. Investors have become smarter. And the aspiration of an individual investor is not restricted to only participation in the domestic market, but they also want to go global. Today, a young professional in any small town and city can invest with same access and opportunity which probably we sitting in Delhi and Bombay are getting. So this, by all means, is financial inclusion and financial empowerment. But this is just a beginning. With this financial empowerment and access, we are also creating trust. And when trust comes with participation, it helps in growing the capital, in growing the savings and empowering an investor. So the real question which we need to ask today is, from 20 years from now, are we here to build the largest mutual fund industry, or are we helping create one of the most financially empowered societies in the world? We can take learnings from the developed markets. Say, America is today the largest economy, not only in GDP terms, but also in terms of participation in innovation in financial services and mutual fund industry. America did not become great country because Wall Street became bigger. America became great because the common investor of America were participating in Wall Street. So today, if you see the number of participation in terms of percentage, it's highest in the world in US. So why can't we also have more empowerments given to our users and investors so that they come and participate? The focus has to shift from AUM to, it cannot be asset under management. What we need to really work on is the trust under management. Today, the investing is happening maybe because of certain persuasions, certain FOMO effect, which we see in a lot of young people. But are they really trusting the process of investing? That needs to be achieved. And I believe that the next decade from here demands not selling of products, but solving the problems. It demands not chasing returns, but to creating outcomes. It demands not onboarding of customers, but educating customers to invest in right asset classes. And also moving from quarterly and monthly thinking to generational thinking, which would definitely require investments on research and development. Today, what India lacks is the research and development piece. We are a great nation, we have a great consumption pattern, we are great savers, but we are not innovators. And to become innovators, we need to spend on research and development. And once that focus comes, there will be companies, there will be themes, there will be sectors where people would love to invest. And lastly, if India's journey to become a developed nation, we need confidence of households to invest, confidence of investors to stay invested, and confidence that markets are accessible, fair, and are for long-term wealth creation. Today, every SIP which is being done, it is being done on optimism. That has to change in the form of trust. From optimism, we need to move to trust. And when millions of people make that choice consistently, we have a stronger ecosystem and a stronger user base. I feel this is a kind of a lifetime opportunity, a generational opportunity we as a nation is witnessing. And my expectation is that let's capitalize on it and let's make India a developed nation before the 2027, which is the desired goal. I believe that during the day, the various discussions and panels which we'll have, it will try to bring a lot of insights into it, a lot of innovations which needs to be worked upon. I'm really excited for the day ahead. Thank you again.
Thank you very much, sir. I now request Mr. Sameer Patil to kindly come forward for his address.
To all. Respected Shri Amarjit Singh Ji, full-time member SEBI, leadership team of ASSOCHAM, and captains of the asset management industry, financial experts, my colleagues from the financial ecosystem. It is a profound privilege today to stand in front of this August gathering at the 17th Mutual Fund Summit. Looking at this room, I see the architects of Indian financial future. When we gather under a theme that is as powerful as capitalizing on India's economic ascent for Viksit Bharat, we are not merely discussing market trends or asset allocations. We are discussing a collective responsibility in shaping a developed nation by 2047. As an depository, today when I stand in front of you, what are our roles and responsibilities? 30 years back, a depository was formed which has transformed the entire capital markets from converting paper trading to paperless trading. Today, we call it as DMAT, dematerialization of shares. What has happened from there on? It has got in security and transparency in the entire ecosystem, and that is where the actual growth of the entire capital markets have seen and witnessed in the last 30 years. And that is thanks to our regulators SEBI. Under their guidance, the aegis of SEBI, this has happened, and it has transformed the entire capital markets of India. When I'm speaking today, it is very difficult when you speak after so many eminent speakers, when they have spoken about the entire industry, they have thrown all the numbers, and then you find all of a sudden find in a spot, what do I do now? What do I speak? So we have heard about the targets, 2047, where do we want to achieve? The recent numbers, 84 lakh crores. We have talked about SIPs. From 2,000 crores SIPs, today we are at 30,000 crore SIP in a month. And this is not small deal at all. This is the power of Indian investors investing in the capital markets. And as the earlier speaker, Love Chaturvedi, also spoke about how the dependency on FPIs have decreased after the emergence of this massive Indian flows in the markets. There are many things that what NSDL has done as a depository for the development of the mutual funds and the expansion, the growth and the benefit of the mutual funds in India. I would like to showcase a few of the points. I had prepared a big speech, but then after speaking to so many eminent speakers, I thought I'll cut short and then just deliberate on what we have done so that enhancing and the messaging is right for all the August gathering here. To develop these markets, to penetrate, investing in stock markets or equities is not only limited now to the metros or tier 1, tier 2, tier 3. It is beyond that. Thanks to technology. It took 145 years for the Indian capital markets to reach 5 crore demat accounts, 2020. From 2020 to 2026, today we have more than 21 crore demat accounts. What has changed? The technology. Technology has played a very, very key enabler here to develop, to penetrate. Now a person sitting some of the remote village in Kerala or somewhere in the far east, northeast, can easily invest in the Indian capital markets in large companies, sitting there on the tip of his fingers on the mobile, and that is the power of the technology. On the mutual fund per se, NSDL, one being the largest depository in India with more than 520 lakh crores assets under custody, 99.9% market share in the FPIs markets, plus covering almost 100% PIN codes in India. So that is the penetration of NSDL. There are a couple of important announcements or plans that NSDL has launched for the betterment of the Indian industry, also for the benefit of the mutual fund industry. One, when we talk about Viksit Bharat, our Honorable Prime Minister always speaks about Yuva Shakti, Nari Shakti. So Yuva Shakti, pertaining to Yuva Shakti, what NSDL has done is NSDL has launched a Yuva plan. When I say Yuva plan, it caters to the youngsters below the age of 24 years. So what happens here is any incremental account opened by a youngster who is below the age of 24, for the next 3 years, he enjoys a settlement fee for trading, for transactions. So till the age of 27, he enjoys a settlement fee. That is Yuva Shakti. Second, Nari Shakti. Very recently, on the 8th of March, when the entire India was celebrating Women's Day, we submitted an application to our regulator, and we are thankful for that immediate approval, sir. Thank you very much. The regulators, our SEBI, gave us an approval to launch the Women's Plan. Now, what is a Women's Plan? All incremental account opened by women will enjoy a settlement free for lifelong. So, thank you, sir. Thank you very much for that. I think this will take the investment, financial inclusion and financial literacy to the length and breadth of the country. And third most important, which is more important to the mutual fund industry, is NSDL has released APIs for conversion of physical demats holding in physical form to the demat form, dematerialized form, conversion and redemption. And NSDL waived off all the charges for consumption and conversion and redemption. So what happens is, if you have any mutual funds in your physical form, you can convert it into demat form without any effort. And that process and that execution and request is done less than 30 seconds. And on T+1, your mutual funds are converted into the demat forms. We spoke about 2047. We spoke about those targets. The question is, how do we achieve those targets? Isn't it? Because all my career, I've been only answering one question is, Samir, how do you take this forward? So, when sitting here, what came to my mind is few of the strategies that can be adopted. So when we look when you look at those huge numbers of 2,000 lakh crores by 2047, which numbers are given by the AMFI, I think that can be easily achieved. One, we all speak about the Jan Dhan Bachat, which saw the massive response from the Indian account holders, bank account holders which opened account. Sir, whether we can start Jan Dhan Nivesh. So when you open a bank account, you also open a demat account, which goes hand in hand. That will not only see that the penetration, but also it will lead to the financial literacy of the Indian investors. Second, what will happen here is, it will not only increase the financial literacy, but also create the interest for them for investments. Second, every person who's salaried or a salaried person, we have the salaries, we have the tax investments, and we have the gratuity. So can a portion of small amount can also be linked to mutual fund investment? That also makes them habitual for investment in the mutual funds. I think this could be, over a period of time, create a large AUM, not only large AUM, the SIPs will also increase, and that might be somewhere will be beneficial for us to achieve the targets that we are talking about, not in 2047, but I think in 2037 itself. So with this, I've got to remind, I had lot many things to say, but nevertheless, thanks for being such an patient audience, and I thank ASSOCHAM once again for inviting us over here, giving us this opportunity to speak. Thank you very much, and Jai Hind. Oh yes, thank you. So I've got a request. I can't say no to the regulator, sir. Yeah, sure. Thank you. Always take permission for the lady as well. Yes. Sir, one more. The key point was that also was made about the KYC. One nation, one KYC. Sir, if it is also linked, the KYC methodology is simplified and linked to the bank account, I think you will see a surge in the number of demat accounts opened. My fellow colleague, I call him Jayprakash, spoke about America. Sir, I think the demat account holders today that we have, 21 crores, is more than most of the South American countries, most of the European countries and Americans put together. So that is the power of Indian population. Earlier, it gives me a feeling speaking at the parliament today. But nevertheless, sir, what is most important is we as Indians today, when we look at a population, we think we are the highest population, but that itself has become our strength. And when we look at 2047 and look at the numbers that we are looking forward, if we somewhere put our efforts and strategize on this, the couple of points that I have made, and which will definitely, encourage, maybe systematically or a bit forcibly, and that is a good way for investment. Mutual funds is a good way of investment because it is always said, mutual funds sahi hai. तो जो सही है वो देश के लिए सही है और देश की जनता के लिए सही है. And with this, I would like to thank the Amarjit sir. Thank you very much for giving this opportunity again to continue on my speech. Thank you, Jindal sir. And thank you all for being this August gathering. And now I really would like to end my Jai Hind. Thanks. Thanks, sir.
That was truly insightful, sir. Thank you. Ladies and gentlemen, it is now time to release the knowledge report jointly prepared by ASSOCHAM and CareEdge Ratings. I request our honorable dignitaries to kindly do the proceeding. I also request Mr. Sanjay Agarwal to lead this report releasing. Ladies and gentlemen, please put your hands together for this very important release of the topic, Mutual Funds Capitalizing on India's Economic Ascent for Viksit Bharat. You may download this very soon. Our 10 card will be coming to your table, so you can download this and read this report. Thank you very much, sir. I now request Mr. Sanjay Agarwal, Senior Director, BFSI CareEdge Rating, to take this proceeding forward and talk about the knowledge report.
Thank you, sir. Welcome, Amarjit sir, whole-time member SEBI, and my friends on the dais, the audience who have taken the time out, on a Friday to attend this session. So in terms of the knowledge report, a lot of what has been there in the report has also been discussed by the other dignitaries. So while I'll keep my discussion short, I'll also probably discuss something outside the report out here. I did a course on certified financial planning about 15-20 years back. At that point of time, one of our lecturers had told us that if you see a newspaper, you will find 28 advertisements for expenditure and 1 or 2 for savings. So today we are an industry, like one of our speakers has said, in 20 years we have moved 100 times from 80,000 crores to 80 lakh crores. So I would like each one of you to celebrate that and facilitate yourself that you are enabling India to save and save in big time for future and grow this country as a Viksit Bharat. So I'd like each one of you to clap for yourselves that you have participated in the journey of financial the point which one of our other speakers had made, that SEBI has done a good job of regulation. So I'd like to point out that whenever SEBI takes up a subject, they do such a thorough job in terms of managing the risk, in terms of controlling the imponderables, and in terms of facilitating the whole investment process, that we have a wonderful industry which is frictionless, which is diversified, which has a very strong holding, and which has among the lowest cost of business. Today, the mutual fund industry operates practically on sub 1% sort of a cost of business. You look at other industries like banking, which operates probably at 2%, and insurance industry has even a higher cost. So we thank SEBI for creating industry and taking it forward from here. The third point I would like to point out is in terms of the potential for the industry. We are at somewhere around 5% of the total wealth of the country today. Globally, this figure is about 20%. So when we are looking at 20%, the industry needs to grow at 4x from the current size, which means the industry needs to go at least 20-25% per annum. Even if you consider 10 to 12% as a return, the industry needs to grow at 10%. Today, the growth is about 5%, so the industry needs to double the growth. So next year, say FY27, we need a net new addition inflows of 8 lakh crores compared to 3.5 lakh crores in the last year. So these are very pertinent points where probably the industry has to get together, celebrate itself, and also take up the challenge for growing the industry from strength. Whereas today we have a huge variety of products, the equity funds, the hybrid funds, the passive investment, debt funds. The industry has grown in size for 100x in last 20 years. But now it also needs to grow into other solutions like retirement solutions on a very long basis and savings products, etc., to take this whole industry from 5% of the wealth of the country to 20% of the wealth of the country. So with this, I would like to thank all of you for this, and I end my speech with a salutation on Jai Hind. Jai Hind.
Thank you, sir. With great honor, I now invite our chief guest, Mr. Amarjeet Singh, whole-time member SEBI, to kindly come forward and address this august gathering. Ladies and gentlemen, please put your hands together for our chief guest, Mr. Amarjeet Singh.
Thank you. Very good morning to all of you, and I appreciate your very efficient timekeeping. I don't need the laptop. Yeah, this is good. So, well, good morning again. Distinguished dignitaries on the dais, members of ASSOCHAM, industry leaders, representatives of the mutual fund industry, investors, my colleague, our regional director, SEBI Delhi office, Vijayant Verma, ladies and gentlemen. It's a pleasure to be here, and I thank ASSOCHAM for inviting me. Before I come to my formal address, let me say that it was nice to hear all of you, and all of you saying very kind and generous words for SEBI. We really appreciate that. But let me also mention, it's not just the regulator. It's the work of all stakeholders coming together. I've been with SEBI most of my professional life, and in all the segments, not just mutual funds. It could be primary market, secondary market, the corporate bond market, and so on. So I've seen it very closely. It's the work of all the stakeholders who come together. We probably get undue share of credit, as a regulator. But so I would like to compliment all of you for working together with the regulator for development of the securities market. We are talking today about mutual fund industry, so I'll focus on that. So I think theme of this summit, and let me also mention, you heard number of themes resonated, overlapped across various speakers. So you heard about the past growth, you heard about, more important I think to my mind was what registered more was the aspiration to grow. I think not where we have come from, but where we want to go. I think that's very important. You also heard about trust. You also heard about the significance of the industry, the significance of SIPs and so on. I am also going to talk on some of those themes. I'll reinforce some of those ideas which have been expressed and maybe try and give you a little larger perspective, the way we visualize where we are and where we want to go going forward. First, let me say at the outset that it's very heartening to note that the MF industry, the mutual fund industry in India, has emerged as an important force in our financial markets and our financial systems today. And it is shaping up very nicely, at least to my mind, on three key dimensions. There could be many other dimensions, but let me touch upon three important dimensions. First, it is enabling households to participate in long-term wealth creation. It is giving an opportunity to ordinary citizens to take part in the economic growth of the country through participation in this mutual fund vehicle in a very transparent and cost-efficient manner. Secondly, as we have seen, it provides stable and patient domestic capital for our growth. And thirdly, it plays a significant stewardship role as an increasingly important shareholder in listed companies. And all these three dimensions, there is tremendous scope for doing more. I'm not trying to suggest by any means that we need to be complacent. There's a need to do more on all these three fronts. My remarks would be in three parts. First, please feel free to stop me if I'm crossing the line. So first, I should also be subject to the same discipline. First, I will talk about how the domestic institutional investors, including mutual fund industry, have played a key stabilizing role in the recent turbulent times. Second, and this is a connected point, I will share some reflections on the growth of the country, which you already heard. And thirdly, I'll outline some recent measures that we've taken for supporting further growth of this segment. So first, let me talk about the resilience and the long-term orientation of our mutual fund industry. The resilience of domestic investors led by mutual funds has become increasingly evident during periods of recent market volatility. Equity mutual funds recorded net inflows, and I'm giving you a little long-term view here. If you look at the data for the last 5 years, so for 63 consecutive months up to May of this year, up to May 2026, and this period covers the COVID recovery, the global tightening cycle of 2022, episodes of FPI outflows, and heightened geopolitical uncertainty in early 2026. In all these months, in all these 63 months which I mentioned, equity mutual funds recorded net inflows. That tells you something very important. Even amidst heightened global uncertainties in March 2026, domestic institutional investors, which is more than mutual funds, invested nearly INR 1.43 lakh crore in Indian equities in March 2026. While equity mutual funds recorded inflows of over INR 40,000 crore. The Indian mutual fund industry, and this we can say with some confidence and pride, it has come of age as a shock absorber for our capital markets. Systematic investment plans, SIPs, have been an important part of this resilience. And the figure was mentioned in the current financial year, on an average, we get about 31,000 crore, which is roughly $1 billion plus every month. As on May 30, 2026, there were over 10.4 crore SIP accounts with SIP AUM of rupees 17 lakh crore. This reflects the growing acceptance of disciplined investing across market cycles. What is important in turbulent times? I think the patience of investors, whether you are big, small, large, you have to be patient. Patience of investors is important in volatile times. If you look at the holding period data, holding period analysis includes an increasing long-term orientation among retail investors, with more than 61% of retail AUM remaining invested for over 24 months. This is an encouraging sign that mutual funds are increasingly being used to pursue longer-term financial goals rather than short-term market opportunities. Such sustained domestic participation has provided, and I'm not saying anything new here, we've been watching this, but I thought the recent uncertain and volatile times, again there was a test, and probably we passed that test. Such sustained domestic participation has provided an important countervailing force during periods of FPI selling. This is also reflected in ownership trends. If you look at, there's an NSE tracker. NSE publishes the changes in ownership of listed companies on a regular basis. So there's a structural shift happening there over time. As of March 2026 quarter, domestic institutional investors held 19.6% of the NSE listed universe, exceeding FPI ownership of 15.8%. Earlier, it was not so. So the FPI ownership was at a 17-year low. The share of domestic mutual funds reached a fresh high of 11.4%. In short, the growing domestic institutional base is helping make Indian capital markets deeper and more resilient during periods of global uncertainty, such as that witnessed recently. Let me now move to the second part of my address in terms of the growth, and this I'll be quick because you already heard some of the data points. We've witnessed significant growth over the last decade. Our AUM has increased from about 14 lakh crore in 2016 to about 82 lakh crore now in 2026. In the last 5 years, the industry has almost tripled in size. Also, I think Mr. Jindal mentioned about the AUM to GDP number, which is again reached all-time high. It is now 21%, but again, as he rightly mentioned, we still have a long way to go. The reach of the industry has also expanded significantly. Now we have about little over 6 crore investor, which used to be about 1 crore a decade ago. This is again a testament to industry's growing retail orientation with, so this is another data point. One is the number of investors. Second is these individual investors account for close to 2/3 of the total mutual fund AUM, which is again significant. It shows their increasing weight in the system. The question to be asked is, where do these investors come from? We have 6 crore investors, but where do they come from? The top 5 states, Maharashtra, Delhi, Karnataka, Gujarat, and West Bengal, they continue to account for nearly 68% of the industry's assets as on January 31, 2026. Asset under management from beyond 30 cities is growing gradually. It now accounts for almost 19% of total industry AUM, compared with around 16% 5 years ago. We can probably grow faster in the B30 region, but of course, things take time. The next relevant question, one is, where do these investors come from? How do these investors join the mutual fund industry? That's the next question to ask. For many retail investors, particularly first-time investors, distributors remain the first point of contact, the first point of engagement with financial markets. Nearly 53% of industry's AUM is mobilized through regular plans. Despite, I gave you a number of data points, despite these encouraging trends, significant headroom remains. Less than 5% of India's population, as I think it was already said, less than 5% of India's population participates in mutual funds as compared to the US, where mutual fund penetration is over 50%. Industry's future growth and will therefore depend on reaching investors across geographies, income segments, and demographic groups. Recognizing these structural realities, SEBI has accordingly, this has been our policy goal for decades. In fact, we wanted the equity culture to come in the country, and this I'm telling you 3 decades back, when we started on this journey. Our vision was that if you want to create a equity culture in the country, this is the vehicle. Mutual funds are the vehicle. So accordingly, policies have been evolving, keeping that goal in mind. So we have adopted calibrated incentive frameworks, including beyond 30 location incentives, additional incentives for onboarding new women investors. This was fairly recent. So any women investor who's new to the market, whose PAN has not been registered in the market in terms of investing, be it from Mumbai, Delhi, small city, big city, doesn't matter. If it's a new woman investor, there's an additional incentive for the distributor. And also the introduction of the Choti SIP framework, the small ticket SIP of 250 rupees. These are all measures to support responsible expansion. Now, third part of my address, some of the recent initiatives. I would like to talk about two new products. One is SIF and one is life cycle funds. SIFs is so we also have to see, as we grow in size, as we grow in terms of number of investors, market will ask for new products. Market will ask for new ways of investing. So the products and the regulatory ecosystem has to evolve as we progress on this path. So I would like to mention about SIFs in particular, the specialized investment funds. This was introduced last year, and the early response has been encouraging. As on May 31, 2026, SIFs have already garnered net asset under management of over rupees 13,500 crore, spread across more than 56,000 investor folios. Across 21 investment strategies launched, the maximum funds have been mobilized under the hybrid long-short investment strategy. This indicates growing investor appetite for differentiated investment solutions within a well-regulated ecosystem. Let me put a disclaimer, I'm not advocating for SIFs as a product. I mean, we are agnostic. It is up to you whether you want to invest or not, but I'm just highlighting how a new product is showing some traction. In this context, so we have put one, since SIF involves, if I can say, little more risk than the other products. We've also stipulated that the distributor who sells SIF should pass an additional exam. A person has to know the nuances of the product before he can sell it to the customer. So there has been a demand from distributors that instead of 2 exams, 1 exam they have to pass in the regular course and 1 for this particular product. There's been a demand that can it be made 1 exam. So SEBI and NISM are working together to bring out a combined mutual fund SF distributor certification exam, which will be a single certification for distributors intending to distribute both mutual funds and SIF products. So this initiative aims to strengthen professional competency and ensure that the entities involved in distribution of mutual funds and SIFs possess the requisite information and expertise about these products before they start selling this. Life cycle funds, SEBI's recently revised framework for categorization of mutual fund schemes. We introduced something called a life cycle fund, which follow a predefined glide path and progressively alter their assets allocation as the target date of the fund approaches. This can support more disciplined, goal-based investing over longer time horizons, and it's encouraging to see that AMCs have started offering this product also to investors. Again, as I said, as a regulator, we are not advocating a particular product as such. Let me also, for investors, let me also add in this context that investment decisions need to be guided by your goals, by the financial goals that you have, by your risk appetite, and by your investment horizon. What is your risk return profile, as it is called in the professional circles? not by short-term trends that are currently in fashion. Because we've seen sometimes some theme suddenly starts picking up and it becomes a herd sort of mentality to rush into those products. You don't have to be guided by, the short-term trends, but necessarily focus on what are your financial goals, what is your risk appetite, and what is your investment horizon before you decide to invest. In an environment where social media can amplify eye-catching returns and drive FOMO, fear of missing out, goal-based products such as life cycle funds can help investors remain focused on suitable asset allocation and long-term financial objective. Let me move to another initiative which is work in progress, and I will finish quickly. Enabling third-party payments. So today we don't allow third-party payments for good reasons, because this can be subject to misuse. It's a good idea from the compliance perspective, but the feedback from the industry has been that inadvertently, by not allowing third-party payments, we restrict certain very genuine beneficial use cases. So idea is to address those use cases. We've issued a consultation paper to address 3 specific scenarios. In case an employer wants to invest on behalf of their employees through salary reduction in mutual fund units, that's a third-party payment, but it seems legit, so it is legitimate and it could be considered. Second scenario is, can AMCs pay commission to the distributors in the form of mutual fund units? And third is, can we facilitate charitable, philanthropic contributions through mutual funds? So each of these is a targeted expansion that preserves regulatory integrity while enabling new pathways. The proposal maintains robust safeguards relating to KYC, audit trails, and anti-money laundering. Mr. Jindal very rightly mentioned, whenever you put new conditions, there is a pushback, there is an opposition. And I think Mr. Lavkesh, right? Sorry, so he also mentioned about how we disallowed the entry load. That was way back in 2010, and I can share a personal experience with you. I used to work in the daily office of SEBI, and we inspected one AMC, of course I'll not name, and there was some misconduct around churning of investments from smaller towns, because there was entry load was very attractive. So you could get an investor into a scheme, and within short time you make him move out of that scheme and rotate the money to the next scheme, and then this cycle goes on. The distributor, of course, had the incentive, because on every entry you are getting a nice commission. So that was, I'm not saying it was a general trend, but we of course noted this misconduct in some parts, and those were the kind of our experiences which led us to restrict the entry load. But the good thing is that it seems painful at the point of a new change, but as people get used to it, you realize in retrospect it was good for a robust, solid, healthy growth with all sufficient guardrails. You're dealing with retail investors who are, may not be so well conversant with the products and the practices. So it's important to have some nice regulatory guardrails around these products. So again, this proposal would have safeguards relating to KYC, audit trails, anti-money laundering, etc., any anti-money laundering requirements, etc. So this is a kind of calibrated innovation that deepens markets without compromising their integrity. Another recent measure, and I think it will go a long way in easing out things, this is in the area of reducing operational friction, if I can call it. Continuing objective has been to avoid operational friction for investors particularly, while preserving necessary safeguards. So what we've done is we have simplified and standardized the transmission framework. So when somebody is deceased and how the assets of that investor get transmitted to the legal heir or the nominee. So we have simplified that process, and we've tried to minimize the documentation required depending upon the thresholds. and mutual fund units are included. This has been done across various asset classes. The objective is to make the process faster, simpler, and less burdensome with minimum documentation for legal claimants. Let me conclude by saying that the progress of the mutual fund industry, as I think one of the speakers very rightly observed, it cannot be measured through AUM, folio counts, or transaction volumes alone. What matters ultimately is what are the outcomes on the ground. Outcomes for investors, are they getting the financial returns that they aspired for? Is there a more productive allocation of household savings from the economy perspective? Is there stronger governance because of mutual funds participation in investee companies? We made substantial progress, but the opportunity ahead remains considerable. We have a very good runway ahead. Millions of Indian households are yet to invest in mutual funds. Reaching them all requires innovation in product design, distribution, and investor communication, alongside a steadfast commitment to investor protection. Because trust, again, trust was talked about. If trust is lost, it is very difficult to rebuild. I'm confident that through the collective effort of all stakeholders, regulators, industry participants, distributors, investor associations, educational institutions, bodies like ASSOCHAM, we can build an investment ecosystem that is aligned with the aspirations of a Viksit Bharat. Together, we can make mutual funds investing not a privilege of the few, but a foundation of the many. Thank you so much. I hope I was...
Thank you for your inspiring and encouragement words, sir. I am now inviting Mr. S.C. Agarwal to deliver the vote of thanks.
Good morning, everyone. Respected our chief guest, Sri Amarjit Singh, whole-time member SEBI. I can say one thing about him. He is very knowledgeable, very down-to-earth, very gentle person. And when he was in Delhi, we know him, very positive mind of person. And now he reached to whole-time member. I wish he should be the SEBI chief at one time because of his knowledge. And he has delivered very elaborative discussion about mutual fund and Viksit Bharat. So thank you very much, sir, for giving your spare time to come here. And really, you have inspired everyone. And you have talked about that specific investment product that is up to 10 lakhs. One can, वहाँ पे F&O and thoda is allowed, and that is a very special product. So that it is different than traditional PMS. And he has talked about 3 dimensions enabled to create long-term wealth for the, this mutual fund industry. And this cost-efficient and transparent and stable and patient capital is required, and this SIF products. And he has explained it very detailed. So, other co-panelists, eminent co-panelists, I can say one thing, all panelists have spoken very, very well and relevant. So, I must congratulate all co-panelists. Normally, होता क्या है कि कई बार तो आपको समझ ही नहीं आता, सिंपल लैंग्वेज में और बड़ा अच्छा डिटेल के अंदर सबने उसको समझाया. Industry leaders, distinguished guests, members of the media, ladies and gentlemen. So, I am here. First of all, I would like to congratulate ASSOCHAM, Ankit Krishnan, DS Rajora and his team to hold this seminar. As Jindal ji has said, since 2000, ASSOCHAM is regularly conducting this seminar. So this is the 17th summit or mutual fund is very important for a general investor. As we have seen, 6 crore investors are deploying fund in this, and more than 27 crore portfolio is there. And our total AUM is 83 lakh crore, which is very good, but still it is less than $1 trillion US dollar. Worldwide, if we see top 10 countries, even Canada is the top 10th countries में आता है, उनका AUM भी 2 trillion US dollar है, और US का 38.5 trillion US dollar है. And their ETF is separate, that is 13 trillion US dollar. So we have to work very hard, as Jay has said, that by 2047, our AUM of mutual fund would be around 35 trillion US dollar. But as on today, still US AUM is much higher, 38.5 trillion US dollar today, and plus ETF. Passive funds in US are getting very encouraged, motivated. The people are using passive funds and ETFs more than the active funds. Here, because why? Their charges is just 0.003%. And our charges in passive fund is 0.1521%. So what a mutual fund has to do reforms. What they have to do, they have to reduce their expenses and attract NRI and outside funds. And that is required, because we have to become Viksit Bharat. And by 2047, if we have to become Viksit Bharat, and so our financial industry has very great role to play. And all type of reforms is needed. All stakeholders has to work very hard, and how we can achieve this kind of height. So mutual fund industry is doing very well. I don't say anything about adverse or anything about mutual fund industry. 20% CAGR growth is there, whereas US and their growth is 6 to 8%. So we are doing growth very good, but still more is required, because we are 140 crore, more than 140 crore population there. Our penetration is just 4.5%, as against US 40%. Because this product you can compare in that way, the index in 1980 was 1,000, and today it is 77,000, 77 times more. That means if you calculate 1,000 to 77, 100 to 700 times. If you compare in 46 years, there is a compounding return of 16% per annum if you are investing in just Sensex stocks. But active mutual fund holders, managers, they are managing this very scientific way. So they normally out benchmark their index returns. So I can say future is great. People should understand. Government has to start learning to students who are reading in schools. They should be educated. So government has to work to educate. Regulator has to work for this trust and transparency, and every industry wala should work making digitally very simple, because it requires easy product. And sitting at 3-tier and 4-tier city, one can apply and can get a good return. So I just can say simply, though I have got the slip, all speakers spoke very well. I must congratulate all the speakers, and yet more sessions are also there. this is going to be end of the inaugural session, and I must thanks all of you, industry, and Mr. Vijayant Kumar Verma ji, who is SEBI head of NRO, was sitting here. So I must acknowledge his presence also, that he is sitting since morning. So, and thanks to him also, and thanks you also, all media person, all sponsorer, thanks to everyone, and ASSOCHAM, once again, I congratulate you all. Please. Thank you very much.
Thank you, sir. I now request Mr. S.K. Jindal to present a memento as a small token of appreciation to our honorable chief guest, Mr. Amarjit Singh. Ladies and gentlemen, please put your hands together for our honorable dignitaries whose gracious presence has added immense value and a distinguished dimension to today's summit. Thank you, ladies and gentlemen. With this, we formally conclude this inaugural session. We will take a short break of 10 minutes and we'll return back with a huge panel discussion. Thank you to our honorable dignitaries for gracing this occasion. Thank you very much, sir.